Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. Today we have Chris Vermeulen of the technicaltraders.com. Chris is a technical analyst, and we are going to pick his brain today on our favorite commodities. Remember to support the show. Hit the like button, jumpstart the algorithm, get the word out, and share this video with anyone that you think needs to hear it. Chris, thank you for coming on the show.
Hey, thanks for having me, Steve. It's a pleasure to be here.
Yes. The pleasure's all on this side of the table, sir. I'm really excited about this because you're a technical analyst like we are. This being your first time on the show, maybe just give us a couple minutes of your background and how you got into technical trading.
Yeah, sure. So really high level, kind of skim it without going into too much detail. In high school, I got hooked in finance into a stock market challenge. Our classroom had to compete against other classrooms across, I'm in Canada, so across the province. And we did not win by any means, but we made a ton of money starting with $100,000 of free play paper money. And that was it. I was like, okay, well, if we can make like $180,000 in a semester, just randomly picking stuff out of the newspaper back then, that's what I wanted to do. And I'm more of an introvert, so I was like, perfect. I don't have to like work with people. I don't have to deal with people. I'm like a pretty shy, quiet guy. I just like to be in my own thing, right? So that is what sparked me at like the age of 16. And more or less, I started learning everything I could. I end up, long story short, I got a pamphlet. My dad got a pamphlet from, I'm drawing a blank now, Larry Williams, about futures trading, commodities trading. And I read this little booklet and I was sold. I'm like, Dad, we have to open a brokerage account. We can make like $50,000 a week. We can make hundreds of thousands a month. And I remember he just looked at me and laughed. He's like, no, he's like, you keep learning. There's no way you're doing that. We're like, he didn't know enough about it. So anyways, long story short, Larry kind of really sparked my interest. I ended up going to college and I turned 18. I got my dad to finally co-sign on a brokerage account. My first trade was in like Palm Pilot, little cell phone with a pencil back then. And I turned $2,000 into $8,000 while I was on holidays. I didn't even look at the stock chart. And that was like the nail in the coffin. I'm like, trading is for me. This is me. Made a ton of money. Then the tech bubble came, lost it all, realized that buying random companies and fundamentals, even if a company's growing quarter after quarter, their share price can still get lopped in half and then lopped in half again. And that was when I was like, this is ridiculous, buying like PE ratios and earnings. And I stumbled across John Murphy online, read his big Bible, which I think every technical analyst has read, or Martin Prings, whoever, they're all the same. And I was like, this makes sense. We identify a trend, we trade the trend and the pattern, and it puts the odds on our side. And that was when I was like, done. I'm done with news. I'm done with the Fed. I'm done with fundamentals. And I am just going to follow price. And so I've been a technical trader for over 25 years. It's what I live and breathe. It's been my video game. Like other people have other stuff. The markets are me. And I have done all the different styles. I went to school for business, wanting to start literally, I want to become a CEO. So I went to business, got out of school. My plan was to work sweeping the floors of a warehouse, work my way up to be a CEO. And I really hated factory work very quickly. And I was like, you know what? I'm going to run a newsletter. I actually started my own health product business back then. But long story short, is I just wanted to do my own newsletter. And through the process of learning, I was like, I'm going to learn and teach others what I'm learning. Pretty much what all the influencers and all the stuff are doing now. But I did this 25 years ago. I started doing all the different styles of trading. So I did day trading. I did, futures. I did Forex. I did options, covered calls. I mean, I've done all the different styles of trading. And now I've gone full circle to what style of investing works with how busy I want to be in the markets, how active I need to follow it. I like stuff that moves slowly, consistently. I can put all my portfolio to work. I don't have to sweat. I don't have all kinds of crazy, fast moving individual plays. So now I'm really down to just ETFs, physical metals as well. And that's kind of my core passion. And I do a lot of other investments as well, because I think you need to diversify: real estate, self-storage. I'm an investor in a movie and all kinds of different stuff, an aircraft company. So I've done a lot of different stuff, but the stock market is, it is just my core passion. I don't really have to think. It just comes naturally because I live and breathe it and I see it every day. So This is where I think I can help a lot of people is see the trends and find a way to try and navigate these so you're not caught on the wrong side. And all we have to do is follow the market. I think a lot of people, as your people will know, you guys are technical traders, but it's not about trying to pick tops and bottoms. It's about identifying a new trend that has momentum behind it, hopping on that trend, riding it, and when it's stalling out, start trimming off profits. When it rolls over, get out of it, go find another asset. So I'm all about only holding things going up in value. If something is going sideways or sideways long enough or starts to go down, I jump off, I go look for a different asset. And I just keep reinvesting into whatever asset is going up that has a volatility that I'm comfortable with.
Yeah, directional trading. I like that. I like that. Your story about getting into trading reminds me of when I got into poker, and they had just come out with online poker, and I deposited, I don't know, $10 or something, and I played. I remember I played this $4.50 tournament. It was the first poker tournament I'd ever played,
Yeah.
and out of thousands of people, I won the thing. And the first one I ever played, right? Now, all of a sudden, I think I'm just some savant when it comes to poker. And I proceeded to lose for the next 4 years.
Did you happen to win on
game.
two kings out
What's
of curiosity?
What'd you say?
Did you happen to win that hand, like the last hand on two kings?
No, I don't remember well, maybe I did. I don't remember. I just remember I
Right.
won the thing, and I thought I was some savant.
Yeah.
And, and then I just lost for the next 4 years, in the meantime, just studying it. And then I haven't had a losing year since, but
Yeah.
that was,
It's funny you
that
bring
got me
that up.
hooked, man.
Yeah, I love poker. I used to build custom poker tables and ship them across North America. I played poker, the same thing. I would play multiple tables at the same time, tournament after tournament. And one of the games I played, there was like 1,800 people in it, and I ended up. It was just battle. It was heads up, and it was who's going to take it, who's going to just get lucky. I had two queens, and the guy had two kings, and he ended up taking me out. But it was one of those free tournaments just for fun. I just kind of play it on the side. And it's like, oh my gosh, I might actually win entry into WPT.
Yeah. That's cool. That's cool. Yeah, it's a fun game. I used to multi-table. I was most effective with 4 tables. Once I bumped it up to 6 or 8, then it was just too many for me. But I had buddies who would do 16 at
It's
the
so
same
fun
time.
though. But I like poker because to me it's very similar to the stock market, because there's always chance and luck. You need a little bit of that always. It doesn't matter what you're doing. But it really comes down to a numbers game and being a solid, consistent player. As you know, it takes one hand to blow up your poker game. Well, it can take one bad trade to blow up your account. It's the same thing. There's no room for big errors, and that's where I really buckle down. I'm all about systems and strategies so that I don't have any of those big catastrophes. I don't mind taking a bunch of small losses, but I do not want to have like a giant hit and just be like, oh, that sets me back like 6 months or a year or 4 years. Like, it really comes down to risk management, which is where most people actually struggle. They can look at the charts and see stuff, but they end up always getting still stuck on the losing side of it because they either didn't trim off profits, they didn't move their stops up, or they just didn't get out when the chart totally breaks down and they're like, I'll just hold on to it a bit. I mean, the money management, the risk side is the most important side of anything. If you do it really well, you could almost throw a dart at any chart and just manage a position, and you can potentially make it work if you have basic technical analysis, but really good position management skills.
Yeah, I agree. There is a lot of parallels there that between poker and trading, and even simple stuff you alluded to, bankroll management. Like with poker tournaments, I would never bet more than 1% of my bankroll on any one tournament. I mean, I worked it out that I cash in less than 1 out of 5 of them. But the ones I do cash, I usually make a pretty good run.
Yeah.
And yeah, bankroll management, pattern recognition. That's another big one, is recognizing patterns of people around the table, how they put their chips in or how fast they are clicking the button for raise or something. And if you're playing online, pattern recognition was another big one, which is a lot
chart
of
patterns,
technical
right?
trading.
The financial markets are just the emotions of all the players. They're all just players sitting at the same computer screen. They're all looking at the same thing. So a chart pattern is the vibe of the people interested in this particular hand or this commodity. So I find there's a lot of relationships that actually kind of tie back to it. And it comes down to, if you can control your emotions, how you trade, you've got money management rules, and you're not afraid to take a loss. You're more happy to get out of something and just lick your wounds and say, okay, I got to go find something fresh and new. You can do really, really well. But most people struggle with emotions and have poor money management. So you just have to play a tight game, and you can just keep, hitting first, second base hits consistently. And the odd time you hit a grand slam, and you never know when they're coming. No one does. But if you play a good game, they just come naturally when you
Yeah,
don't
you're
expect
right.
them.
You're right. There is a lot of emotional to it. I actually have a mental coach for trading, and I had one for poker for years as well. Maybe I'll bring him on the show. Actually, that might make for a good episode.
Yeah.
Okay, let's go to the charts here, Chris.
All right.
This is we call this catnip for our audience. They love the charts, so this is going to be a lot of fun. Maybe we could start out with the S&P 500. We'll pull up SPY or SPX, whichever one you want,
Sure.
and
Yep. All right. Let me just grab
see
the
what we see
charts.
here.
All right. Should be able to see my screen.
There we go.
Yep. All right. So yeah, everybody's got their own take on the markets, but there's a lot of things going on right now with the SP 500. We're struggling with obviously the July highs over here. We got a lot of volatility, congestion going on. But there's actually a lot of people actually really fearful in the market. If we actually look, I've got a sentiment chart that on the right-hand side here.
Oh, cool.
When it goes red and orange, that's when people are actually very scared. They're buying downside protection. They're moving into defensive sectors. There's just not the big money flow into the market. What's really strange about this is it seems like a lot of people are betting and fearful and expecting they're picking a top. And if this breaks to the upside, I think it is going to spark a very strong rally into the end of the year in the SP 500 and NASDAQ and pretty much all stocks. And it's going to create a huge short squeeze. And I think we might actually go up and break all-time highs on the SP 500, which will then even further trigger a short squeeze, because there's so many people betting on a major market correction. And the shorts are going to have to get out of it. When we get to the gold charts, I'll show you exactly what I mean, because it just happened on gold. But there's also going to be all the people buying for the shorts. If we hit new highs in the SP 500, there's also going to be a whole new wave of people saying, I cannot sit on the sidelines anymore. I have to get in. We're in a bull market, new highs, and it's going to also suck in the rest of the people who aren't in yet. And we could see a very strong 1 or 2 month surge. And then the big question is, what happens once that momentum stalls out? Do we see big volume selling? Do we see the big institutions and high volume step into the market and start unloading, as literally the retail investor just got sucked in and literally buy at a new all-time high? So yeah, the SP 500, I don't know what your take is, but I think, it's in a strong uptrend. It's stuck under resistance. It's trying to just eat through there. And I think if it breaks to the upside, we're going to 4,800, I think, on the SP 500.
Yeah, if you run a retracement from the last high, I'm pointing at the screen like you guys can see it. A retracement from the last high, when was that? In June, or I'm sorry, if go back even further, zoom out a little bit more to the all-time high.
Yep.
And then down to the low down in October. Yeah, there we go. Okay, now if we have a retracement, I was taught if you have a retracement up to the next level up, which I think is what is it, 78.6, I think.
There's 618. I have 618 and 0.5. But yeah, there is another one in the 70s. Yeah.
Now, if you run the one into the 70s, we broke that back in July or whatever, and we're touching on it now as well. Have you heard that if you break those, then you run up to over 100% retracement? Is that something you were taught, or not really?
I've never used the 75 area. So you're talking about this full retracement. I typically, I like to see the markets pull back to the from the all-time high.
Yeah.
Are you talking a retracement from this high down to this low here?
Yes. Yeah. Yeah.
Yeah. So I don't know. I don't actually draw the retracements quite that way. I actually use kind of upside Fibonacci targets.
Okay.
We have come down to this 50% level based off this whole level. So, I think we're in a very strong bullish phase. The way I would probably draw this myself is I'm more so of a Fibonacci extension. So I would take multiple levels here where you've got the low, you got the high, this will draw a critical level. And generally the way I see it, and I stair step my way up, is you have your first run, you've got your pullback.
Yeah.
If the market comes up to the 618 and pulls back or pauses, we typically almost always go up to the 100% measured move. And then, so if we were to take like this next Fibonacci extension, I would take this run here and we'd move it up to the highs. And so we are literally pausing at the 618, which in a lot of cases, if you pause at the 618, it typically happens to be like a previous high. You notice over here, it was almost a previous high as well.
Yeah.
And so it is pointing to all-time highs, like 4,900 on the SP-500, based on this momentum. But it is saying that we should have a bit of a pause and pullback, and that's what we're getting. So that's the kind of the way that I see this market. Is I'll draw multiple Fibonacci extensions to the upside.
Okay.
And then I'll use the retracement, saying, okay, well, if we go from this low down here to this high, I'll look at the retracement down here to the 3.38 or the 0.5, somewhere in this box is where I consider the sweet spot for a retracement. We want it to pull back 0.38 to 0.35. If it goes more than that, then it usually does quite a bit of damage to the chart, and it just, I find it loses a lot of its upward momentum. So that's kind of my take on where we are. I think we've paused right where we should. It's where momentum from Fibonacci says we should be stalling out. It's also a previous high, and all the sentiment right now is turning bearish, and that is great. We're stuck right under resistance, and if this pops, I think it's going to be a feeding frenzy into the end of the year to close out the year with a killer return for the indexes.
Yeah, typically around this time of year, if I'm not mistaken, we get a little bit of a drop, and then we kind of get what we call the Santa Claus rally shooting up in December, correct?
Yeah. If we actually take a look, like, so this is a perfect example here of the SP-500. So if you look at the 30-year seasonality, so in January, we typically see the market work itself up to June, July, pulls back to the end of October, and then we have the end of the year holiday rally. So just look at this overall pattern, and then we go to the SP-500 and we look at it for just this year, and we've got pretty much the same thing. The market ran up, topped out in June, July, came down right to the end of October. And here we are on this rally. And technically, based on seasonality wise, we are right here. Just started December. There should be a pause and pullback, and then we go pushing higher. So there's a lot of things layered into the SP-500 right now, saying, people are betting on the downside, yet everything in my analysis is saying it wants to go higher. So if it breaks higher, there's a lot of people on the wrong side of this trade. They're going to cover, and then they're going to buy because they want to get in. So I'm really excited to see the next couple of weeks as we go into the new year.
Yeah, me too. I like that a lot. That would be perfect if it played out exactly like it has in the past.
Yeah, it would be.
Okay, let's move on to the dollar, the DXY.
All right. Yeah, so the dollar, the way I see the dollar, I'm just going to go and take a look at the big picture view here. Just, I like to kind of always step back, look at the big picture. So I feel as though the dollar eventually, I think, is going to get back up to these highs, the 114, back up into the 120 area.
Okay.
The scenario that I think we're working ourselves into is something just like this. I think we're working our way up to a very similar kind of 2000 kind of bubble, where I think we're going to see the stock market, the economy, all kinds of different assets struggle, and the dollar eventually, I think, is going to skyrocket up, back up to these levels. And there's going to be a big financial reset probably in 2024. And this is going to put some pressure on metals short term. But then I think we're eventually going to see the dollar break down and do one of these, a multi-year sell-off. And that is going to be the spark of, I think, what will finally be like the mega run in precious metals, gold, silver miners, probably uranium stocks, all those different things. So it's really exciting to see this. And, the last couple of times we had major market corrections, the US dollar skyrocketed. In 2008, the US dollar skyrocketed. When the markets are collapsing, we just tend to find the overall US dollar rallies. And that's what we saw in 2020. We started to see the stock market struggle. We saw the dollar go up in 2022. The dollar was the play of the year. I mean, if we look at the daily chart for the dollar and start zooming in, I mean, just look, stocks and bonds collapsed and the dollar went up. And that was one of the plays that we were focusing on. Just let's move to a slow, consistent currency. And the way that I trade is as the markets get wilder, I move down what I call an asset hierarchy. I go from the stock market being the most volatile asset, and then we move down to bonds or a currency like this. So we want to move to slower and slower moving assets as the market gets crazier. And it's the opposite of what most active traders do, because typically volatility spikes and it's like a bug zapper light. It literally draws in the active traders saying, oh, there's huge moves. I got to catch these. And to me, I do the exact opposite. We step away and we go find these nice trending assets that we can just dump our money in, ride these trends up, grow our account while the markets are falling apart. And then when the markets restabilize, we can go back and move back into a higher volatility asset like the stock market and catch the next move up. So, zooming into where we are here today, I feel like the dollar is trying to carve out a bottom. I think if we get a rally into the end of the year, I think the dollar is going to trade sideways or potentially pull back even further. But eventually, I think when the stock market tops out, I think we're going to see this dollar take off. And I think it's going to be a very strong play for somebody who wants a slow, consistent moving asset and avoid the downside of the markets.
Yeah, and I guess that makes sense too, because if the dollar is getting stronger, then it takes fewer of those dollars to buy the same goods, service, or stock, right?
Yeah, for sure.
Okay, and if it's weaker, then it takes more of them, so that drives the share price up. Okay, interesting. All right, let's move. Oh, what are your moving averages here? I see you got the blue and the purple.
Yeah, so I've got I like to stick with three kind of core moving averages. So I have this little thin blue line, which is the 5-day.
Okay.
So I consider that kind of like the high momentum move. If we're in a strong trend, it's naturally going to want to stay above that.
Yeah.
And then I have the 20-day, which I find is like critical. I think if price is above the 20-day and it's sloping up, especially if the 5 days above that as well,
yeah,
you're in an uptrend. If the 20 days flat line or trending lower, prices below it, you're more or less in a kind of a swing or position trade, like in a downtrend. And then of course, I also have the 50-day moving average. And I just love these. They're three different styles of investing, three different time frames and momentum. And I just find they provide really good bias. Should we be bullish? Should we be bearish? Are we in a transition period? Things are all mixed, right?
Yeah. Okay. We use the 10, the 20, the 50. You don't use the 200?
Sometimes. I mean, I not really.
Okay.
I'll look at it for a long-term standpoint. Like if I see it in headline news, somebody's like, "Oh, the market's hit its 200-day," I'll quickly pull it up and be like, "Oh yeah, it has hit it." But I mean, I'll look at it for an underlying bias. I actually use the 150-day moving average. I prefer that one.
Okay.
I read Stan Weinstein's book years and years ago about the 4 stages of the market. He uses the 150-day, and I've naturally always used it. I just found it works really well. If price will find support at the 150-day, the 150 days sloping up, price is above it. You're in a nice bullish phase. If it's sloping down, price below it, you're in a bear market. So I use that one, and it's obviously a lot faster moving than the 200-day. So I get to identify major trend changes 50 days or 50 periods before the 200-day, which I find is just a little too long and it's kind of out there.
Okay. All right. Let's go on to gold. So we had a run up in gold recently that hit all-time highs. So we had the triple top that I think the official number was like 2,089, something like that it hit 3 times. And then we just absolutely blew through that last week. Pretty bearish looking candle there, right? I mean, I guess if we're a gold bug, we're hoping that it doesn't close looking like that for the month. What do you see here with gold?
Yeah, I mean, we've seen gold hit this resistance level several times. The average pullback is about 17% over these 3 pullbacks. This is a bearish looking candle. The price ran up, squeezed out all the shorts, anybody who's betting against it. And then also those who had orders set saying, if it breaks the new highs, I've got an order, it'll buy me in. So it definitely ran the stops for the shorts, sucked in the people at the highs, and then huge money stepped in and sold it down. This is a bearish candle. It is, if it closes down like this, we potentially have, usually it's minimum 3 bars after this. That should be a negative bias. So that's not looking the best for gold. A really good view here is if we just go and take a look here at that whole price spike, more or less, this was right where the price broke out.
Is this the 10-minute, each bar is 10 minutes here? Is that what we're looking at?
Yeah, 10 minutes.
Okay.
So this is yeah, so this here is a day. It's hard to see here. We had a holiday in here, but or the half day Sunday, but we have resistance right through here. And then of course, price broke to new highs. The shorts got squeezed out. Everybody piled in who wanted to get in at a new high. As soon as that trade was filled and that momentum stalled out, pretty much it was just huge selling volume to the downside. And we just have seen this big pause and waterfall sell-off. And this is what could happen with the SP-500, especially if we look at it from think of this as a monthly kind of standpoint in terms of these 2 bars. We might see a very strong surge in the SP-500. We have 1 or 2 strong months. We blow up to new all-time highs, and then suddenly big sellers step in, and everybody who literally just buys in, just like gold here, quickly ends up underwater, and the volume is just ramping up to the sell side, and people are selling it. So it's not a very bullish sign. This definitely looks like a technical run. Like the market was just squeezed up there, and then it just blew through the orders. And so yeah, it's really interesting how this is unfolded. I'm interested to see where gold pans out. Let me go back to let's go to the daily chart real quick here. What's interesting is obviously gold blew through those highs, and miners and silver are all just dead in the water. They're nowhere near the highs. They're underperforming. If to me this was like the full-on real legitimate move in precious metals, I think everything would be participating. This is more like a technical squeeze. Gold I see is more of a global safe haven play. So it's a nice big slow moving commodity, which means the slower it moves, the more investment capital I find wants to go into it, who literally just buy it and hold it. So, miners and silver are more speculative. They go up and down, people chase them, they get stopped out and shaken out, they actively trade them. Gold is a different beast, which is why gold is trading, I think, up near the highs, because the whole world is slowly accumulating and buying some gold. We're in war times. You go to any average investor and be like, if you had to go buy something that's not stocks or bonds, they would probably be like, other than Bitcoin, they'd probably be like, I'd probably buy some gold bars or gold coins. I mean, that's what, the older generation is used to buying. And that's why I think gold's holding up. It's just kind of that next, I don't know what to do. I'm just going to buy some gold. And because it's been holding up so well, moving higher, it actually spurs people on to be like, it's doing really well. I'm going to buy some more. So I'm not sold on this rally yet. It'd be interesting. It's going to be very interesting to see where December closes.
Yeah. Okay. So you can see a little more downside like we do.
Yeah, so just to draw out where I think gold is going, just to give you kind of the high level view of the scenario that I see unfolding, I believe we're coming into a market just like 2000, 2001.
Okay.
Where the dollar was really high, and then the dollar sold off for many, many years as gold went up. Well, I believe we kind of somewhat started that back over in 2019, or we're actually kind of in that phase right now. But along the way, we are going to have a bear market. We did have a bear market in 2008. Gold pulled back 34%, which is pretty big pullback. But right now we're in this phase, like it's consolidating. We're in this early stage here. It's almost similar to this. We're actually in this consolidation phase. Maybe we're going to have a nice rally in gold. Maybe this is going to rally up for several months because gold typically does very well just before a major economic reset and financial reset. So there is a bullish story for gold having a nice strong rally for a few months. And then when the stock market goes into a bear market and we see a big reset, gold will most likely pull down simply because of selling pressure, and also because the dollar will be screaming higher. And I think after the next pullback, wherever that is, it might not be that far out. It might only be 4, 5, 6 months from now. I think that's going to be the spark of the next major rally. So I'm actually looking forward, to a pause or a pullback in gold and for the stock market to correct, because that is the setup for gold to go into one of these massive, massive moves. We'll be looking at silver probably like $50 or $100 an ounce. Miners will go ballistic finally see those things start to move hundreds or thousands of percent. So there's a very bullish case. Right now, I'm still pretty bearish, and I still think there's like 6, 8, maybe 12 months before the precious metals market, I think, really takes off.
Okay. Okay. Interesting. All right, let's pull up silver.
All right. So silver and miners, I kind of group them really into the same thing. Again, gold is equivalent to trading right up here.
Yeah.
Silver is down 50%. Miners are down like 40, 50%. They're just, they're building a base. They kind of built this base. You could argue they've kind of broken out of it, and they've got the first launch pad kind of built here. It's just kind of wading through a stage one. We're kind of in the next level of the charts. You guys probably look at the charts like I do, which a way to look at it is think of it as an apartment building. You got floors and ceilings.
Yep. Yeah, there's a lot of resistance built up around $28 there.
Yeah, and when you break through a ceiling, you go to the next ceiling, and then you'll ping pong around potentially. So I think there's a lot of work to be done in silver. But as we know, silver can really take off. When silver does play catch up, I mean, it just screams. So there will be a time, I think, to get on the silver train and the rocket ship and catch that. I don't see it being right now. It's just not showing any real signs of life. But I like silver and I like miners, just not quite yet. And the fact that they're underperforming and just not participating is a sign that space I don't think is quite ready yet.
Yeah, if you could zoom out just a little bit further, and you can see that we had a monumental run back in the 80s, and then nothing for 30
for way
years.
Too long.
So it's kind of like you're waiting decades for a moment that's going to come and go in 2 or 3 months.
Yeah, exactly. I mean, if we were to zoom in, so there's all that dead time, as you just said, all through here. What's kind of interesting is, we had this big kind of move up, and it traded sideways for a while, and there was that little short squeeze just before the 2008 major bear market took place. Silver ended up rallying just like gold did, but then it just kind of puked out and fell out of bed. And I don't know what the correction was in silver. It should be somewhere around 50, 60%. So this similar scenario, we could still see silver run up. Maybe it comes up to these highs, but then we still have a big, big shakeup in the markets simply because of margin calls and all kinds of things that happen during a financial reset, that even if people don't want to sell their gold or silver, they're still forced to sell them because they're running out of money and they're trading and investing on margin, which is borrowed money that they're now offside. So again, this scenario is the same for gold, silver, and miners. It's, to me, there might be some more upside. And this is what I love about technical analysis is I don't really care if we get a run here for a little bit or if it sells off. If we get a trend that confirms, then we can get long and we can ride it. If it rolls over, we can get out of it. And, that's the nice thing about it. Same with the stock market. People are like, well, we need to know, is it putting in a top or is this, a bottom or what is it? I'm like, it doesn't matter. We're not trying to time these things. We're trying to follow the bigger underlying trends. And so I just follow the trends. I let the market tell me when it's like in a new trend, and then I get on board and follow it. So I don't really trade chart patterns so much anymore. I don't try and time anything. I literally let the charts, cycles, intermarket analysis. As you know, every market is related. If one asset class like the stock market is going down, typically a different asset class is going up. Could be currency, could be bonds, but there's always ebbs and flows. And if something's going down, something else is going up somewhere. And I just want to make sure I'm holding something that's going up.
Yeah. I'm kind of excited for the metals here. Okay, how about copper? Can you bring up copper?
Yeah, let's take a look. Yeah, so taking a look at the copper chart here, this is the monthly long-term going back to early 2000s. It broke down. If we just look at this, we can look at this chart pattern here. We kind of had a topping phase through here. You could argue that was you could say there was maybe a triple top or two double tops of closing bars. And then we broke down, and now it's kind of consolidating on this next kind of critical level here. It's actually very similar to what we saw back over here during 2010. We saw a topping phase. It broke down, and then it consolidated through this range, and then eventually it kind of gave way and sold off. So to me, this isn't a very bullish looking chart. Just looking at the long-term picture, we're in the upper end of the range where it's been valued at. I think we're going more so into a recession, which it's going to be home buildings was going to come to a screeching halt. I mean, all the wiring, there's so much use in building materials for copper. It can be a really good leading indicator of the economy. So to me, it is struggling. It's trading sideways, but to me, I feel like it's going to eventually move down in due time.
Okay. Can you go to the daily chart?
Yeah.
And then kind of focus in on the zoom out just a tiny bit. I'm wondering if this is like a, do you see like a pennant forming there? Not really?
Not really.
I'm looking from kind of like October, and then it shoots up to, the beginning of 2023. That would kind of be the pole, I guess, and then kind of coming down like, that a pennant that broke through, or
I guess
lines that don't even matter?
Yeah, I would say it put in a double bottom. It had a really nice rally. Like if we probably use Fibonacci extension, we could just grab this low, this rally, and come down to this low here, and you can see it rallied up, it pulled back, it came all the way up, hit 100% measured move, and now to me it's kind of channeling or flagging down, and it's settling back down into kind of this support zone. So you could argue it might be a pennant, but it's a pretty noisy chart. One of the reasons why I don't really look at copper too much is just I don't invest and trade in things that I don't follow or I don't know very well.
Yeah.
And I also don't like really noisy charts that are up and down all over the place. I always try and find stuff that's fairly slow, fairly consistent, and track those. So I would say that copper here has faded down towards support. It's had a really nice bounce, and it has broken some highs. I mean, it's broken a bunch of these short-term highs. We have a high here. We had a little high here. We've got some more highs over here and another one here. So it has definitely run up and had a very strong impulse move, busting through a bunch of small resistance areas. And so now it's settled down to the 50-day and it's having a bounce. This, technically it's in an uptrend. All the moving averages are sloping up. Prices, the 5 days above the 20-day and prices above it. So this still has a bullish bias. It might want to push up and go back up towards this $4 mark. So short-term wise, it's actually in an uptrend and just bouncing off support. Okay. Long-term wise, just kind of going economic cycle, looking at major stages of the market. To me, it's in a topping stage on the verge of going to a multi-month or multi-year kind of downtrend.
Okay. Yeah, copper typically doesn't do well in recessions. All right, let's move on to uranium.
All right. So we're actually long uranium stocks, but I can't pull up uranium futures on my platform.
How about your URA or URNM? Oh, there you go, URA.
Yeah. So here's URA. The big picture. Let's go way back here. Obviously, they were out of favor forever, and now they're coming back from the dead, and they're really starting to ramp up. It is a tiny space, small companies. I think these things could be like kind of like the next Bitcoin / like the next, big silver gold miner rally, hundreds, thousands of percents. So we're long this actually right now in a trade. We are up into kind of resistance, these previous highs. So it's struggling a little bit here, but it is in a strong uptrend. It's moving up. Again, when the stock, like I look at the stock market like the ocean, and if the tide is going up, it lifts all boats. When the tide is going down, they all go down. The stock market is more or less the same. If we're in a strong bull market, it pretty much lifts all stocks. You can throw a dart at the board and do all right. But right now, I think we're in a transition between a bull market and a major bear market for the equities and the economy. So we're kind of in this treading water. Some of these sectors are coming to life, having these nice runs, But when the market, and if the market does roll over to a big financial reset, unfortunately, these stocks are going to get pulled down, I think, pretty hard. But to me, that is actually a really good opportunity because I believe big money's been moving in. I think there's a very, very bullish case for uranium down the road. And the time will come, I think, when we'll be able to pick these up at the same price here or potentially at a much lower price. And it'll be the start of something big that lasts many years and take advantage of these individual companies or an ETF like this and just grab the whole basket as kind of a little more of a no-brainer play. So I like it. I mean, especially if you look at the weekly chart, they all show like nice. Like to me, this is more of a pennant formation. This, you get the big rally up, you get this really nice kind of
yeah. Okay.
That to me is more of a pennant. And then now we're breaking out of it. It has a longer mast pull. So it's just up at resistance and it's just trying to eat through there, and it might really pop. We might have a big pop with the stock market over the next couple of weeks.
Have you trimmed any of your uranium positions yet?
We do. Yeah. We pulled off half of our position. So we're just sitting with a trailing stop, a 10 or 15% trailing stop.
Okay.
Yeah.
Okay. Yeah, we trimmed a little bit too, not nearly 50%. We only took 10% off the table, but maybe we should be selling a little more. It's been a heck of a run. Man, this has been a lot of fun.
Yeah.
It's been a lot of fun. Okay. How about oil?
All right. This is the weekly chart. I'm just gonna go back to the actually I'll go back to the monthly here real quick. We'll just take a look at the monthly chart. So I believe we're in something very similar actually to what happened in 2008, where we saw a little bit of a consolidation for several months right through here. And then we had this huge squeeze up just as the economy, typically gold and energies and gold do really well just before a major financial collapse. And so we saw that happen, and then we saw oil pull back, and it found support along here for a month. It took a bounce, and then we went into the actual stage 4 decline. That was like, this is where the bloodbath really hit the stock market. I feel as though we've done something very similar here. We've kind of got the same level. We had the big blow off phase. You could even argue on the weekly or daily chart, this looks like a really clean double top. And now we're coming down, and we're just kind of, the Fed and everybody's trying to just stretch this market out, kick the can down the road. But when it breaks, I think we're going to see another huge plummet in crude. So it has a very similar feel to copper for me. Longer term, I'm pretty bearish on it. It is slowly getting back down to a support level here where it might have a bounce, but I feel as though we're in one of a very similar scenario that we're just going to see difficult economic times. Travel is going to come slowing down, product sales, oil's used in like everything. So I think we could see it continue to kind of run lower over the next several months.
You could see it getting down to $40 a barrel, or?
I don't know. I mean, it doesn't even seem that cheap anymore after going negative, but
yeah, right.
But I mean, it has hit that level a few times. I mean, we got down here to here, a long time down here. Yeah. It's not really that out of the equation. It has done it 1, 2, 3, 4, 5, however you want to count all that. It's not out of the norm. And that's not that long ago we were down there. So
yeah. Okay. Yeah, that negative $30 a barrel was the trade of my life. That was awesome.
You know what? I wish I traded it. I saw it unfolding. I watched it as it was going down. I couldn't leave the computer for the whole time it was all happening. And in my head, I was calling some friends. I'm like, how do we profit from this? I don't understand how this whole thing works going, upside down on a trade. And I knew what was happening, but I didn't know how to take advantage of it clear enough that I was like, I don't actually want to jump in because I actually don't know what I'm doing. And it was so frustrating to see that move and not do anything. But it just goes to show I'm really solid. I'm really stingent on how I trade. If I don't get something or I don't like it, I just don't trade it.
Don't trade it. Yeah.
It's painful to watch, but it was a rush. I remember being on the phone. One of my friends is an oil commodity guy. So they take barrels off companies or freight ships that for some reason have excess, or a company doesn't have storage for them, and they buy them for a huge discount. And anyways, he was like having a heyday. He's like, I can't talk. He's like, you won't believe what's going on over here.
I
Oh
can't talk.
God.
I'm making too much money right now.
Yeah, yeah.
I remember that day my buddy called me because as COVID was crashing, we went all to cash, and as the stock market was crashing during COVID, and my buddy Dano called me up. He's all, "Hey, I found the bet." I'm like, "What is it?" He said, "Oil's negative $30 a barrel right now," and I'm like, "How is that possible?"
Yeah. Yeah.
That was
Crazy.
awesome.
I
Uh,
know.
but okay, how about platinum and palladium? So we've what put this one on our radar was that the ratio between gold and platinum has gotten down to like zero point 0.4 to 1, you know, and there's been moments in history where it's gone up, you know, 2 or 2.5 to 1.
Yeah.
And so relatively, I mean, in comparison to, you know, one metal to the other, it looks really cheap. Do you see anything on this chart that gets you
I'd
excited?
say I would say it's, you know, in a long term, really just in doldrums. I mean, it's just building a base, just like uranium, just like what gold miners have done. They came down for the last, you know, 7 years. You know, the longer something builds a base, the more upside potential it has, the more power it has later. So I love these things that, like, that's why I love uranium, man.
Yeah.
It's this is the same type of thing. To me, it is down near support. It's looking cheap. I mean, who would have thought platinum would be like way cheaper than gold um, back in the day? And here we are, you know, it's just bouncing bottom. To me, I trade, like, I always follow Stan Weinstein's 4 stages of the market. And to me, this is a stage one. It's choppy, it's somewhat trendless depending on the time frame you're looking at it. So I don't trade anything in a stage one. I wait for a new stage two, which is a markup phase or a bull market phase to kick in, and then I jump on that and I ride it. So I don't mess around with stuff that's going sideways, because I try and look for a bit bigger trends. I don't zoom. This is the monthly chart, obviously. So I'd be waiting for this when it starts to break 1200. Or even, you know, 1150, somewhere in here. I mean, when it gets up to those upper ranges, I'll start getting excited again as well. I would like to see platinum and palladium participate in a precious metals rally. That would be the sign that, you know, the space has come to life. But they just keep going down. Gold hit all-time highs, as it's the one known that everybody knows. They can buy it. They can go to the pawn shop and buy coins. Whereas platinum and palladium and all these things, they're a little more selective or niche, and they're not participating yet.
Yeah, a little more obscure. Okay. And palladium.
All right, so this is the monthly chart, and it has just like fallen out of bed.
Just
I mean,
gone
it's in a
down.
full on bear market phase. You could say it put in a, I don't know, 3 spikes to a high, or you could even argue as a head and shoulders if you negate the random price spike up there. Um, but overall, I mean, yeah, it is definitely selling down. I think it's at this, you're best to stick with the trend. I always trade with the trend. So I mean, is it a high momentum move to the downside? It's under the 5-period moving average on the monthly. That is a very, very strong trend. And typically at the end of a trend is when you get some of the biggest moves. So while time-wise, it might be darn close to a bottom, there could be like some crazy, ridiculous spike in wick that recovers by the end of the month, and then it takes off. But it's these big random spikes, these types of things like right here and over here that really shake people up and throw them offside.
Yeah.
So yeah, it's difficult if you try and pick a bottom. These spikes can be very, very dangerous, because I find the last little bit of a move is when the biggest volatility hits, and it can be just enough to make you break and say, I got to get out.
Okay.
So yeah, it can
Okay.
be pretty severe.
All right. Cool. Well, thank you very much, Chris. This was a lot of fun.
Yeah, great.
If someone were to sign up for your service, what can they get?
If they sign up to the service, so pretty much every morning, depending on the service, I walk through the charts just like you and I did, generally on a little more granular level. In fact, I didn't show any of these charts, but I look at the 30-minute chart, and we can see when the market's overbought, oversold, when there's panic selling or FOMO. And so we can see all these, you know, intraday reversal points. But every day I walk through all these different assets, a lot more, and sectors as well. And I just talk about what happened yesterday, what happened in pre-market, what we expect today, how it's going to affect our positions. And of course, whatever trades I put on with my own money, as are the trade alerts that I share with subscribers. So really, you're just following me trading my accounts, and I focus strictly on ETFs. And yeah, so more or less, you learn, you follow the markets, and you kind of just shadow what I'm doing. And we got a little community. You can communicate and chat with other members and stuff in there. So it's good. It's a very tight group of technical traders, investors who just want to make money, and they don't want to go through the crazy whipsaws of volatile, stocks and sectors. I focus on consistency. It's just, let's just pound out trades and hit 1-2 base hits consistently, and then occasionally we have a big grand slam as the icing on the cake.
Nice. Well, then there will be a link down in the show notes. If you're interested, you can check Chris out. Chris, thank you very much for coming on the show, and thank you for tuning in. Support the show. Hit the like, subscribe, and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.